Well, hello everyone, and welcome to this, our latest online briefing, the global economic meltdown and COVID-19. The world has not yet come to grips with the full impact of COVID-19, but few doubt that this will be perhaps the most significant economic crisis of our time. It's hard to think of any place around the world that will be unaffected. It's my great pleasure to introduce two experts to discuss this crisis. They are Professor Jennings, the head of the School of Politics and Economics at King's College, London. Hello, Jeremy. I think you're joining. Where are you joining us from?
I'm joining you from the East End of London. I'm in my study in the East End.
Fantastic. And I gather you've been running your department from up there for some time.
As modestly and as well as I can, yes.
Excellent.
I never do it very well, so it doesn't really matter where I am.
Oh, no, that's nonsense. Anyway, our second expert is Tom Elliott, who's also he's a visiting lecturer at King's College London, and was previously senior market strategist at JP Morgan Asset Management for 18 years. So we've got a packed hour ahead of us here, and I'd like to give everyone a brief overview of what we're going to discuss. Essentially, there are two basic questions. And they are, what's happening to the economy now? Just what damage is being done where? And then the next question is, what are the future implications of this crisis? Now, both of those questions have a political and an economic aspect. Tom will, of course, handle the economics of this, and Jeremy will look at the politics. Now, a brief note, if you haven't joined us before, if you've got a question, if you look at the bottom of your screen, there's a Q&A box. And you can write questions in there, and we will look at those questions during the discussion and try and get those addressed. Those questions will be reserved mainly for the end because we've got quite a lot to get through here. Now, Tom, I'm going to go straight to you. This is a huge subject area, but can you just start by giving us an overview of the current shock taking place within the global economy? Tom.
We're looking at it is as an event-driven crisis rather than a cyclical crisis to the economy, such as what often happens if economies overheat because of animal spirits and interest rates have to rise to conquer inflation. We haven't had that. It's more akin, an event crisis, to the 9/11, where you have a sudden shock to demand. The banking system remains in good shape so far. And the initial assumption, as seen by the stock market fall and then rally, was just like 9/11. This event shock would come and pass quite quickly. People were talking about a so-called V-shaped recovery, powered by pent-up demand and accommodative monetary policy. Interest rates have come down again in the States and UK as well, and government spending. But of course, there's a but, and this is a significant but. The longer we're in lockdown, the more it becomes akin to a cyclical downturn, because we have company insolvencies, a rise in unemployment, which risks taking demand out of the economy for a prolonged period of time. A company that goes insolvent does not reopen at the end of lockdown and hire those unemployed people. In addition, there's a huge buildup of debt taking place within companies that don't go insolvent, and within households that suffer unemployment. And so, whereas we do expect a bit of pent-up demand when lockdowns end, it's going to be subdued as people pay off debt and rebuild savings. And so you no longer hear of a V-shaped recovery. Instead, you hear of a U, a prolonged U. Some people say a reverse J. And if we could now go to the chart, we'll try and illustrate what these mean. And this comes from Aberdeen Standard Investments. It's a bit busy, but if you'll just bear with me, it shows on the bottom axis quarters since the crisis began. And you can see that the first point is halfway through the first quarter. And the dotted line shows global GDP trend growth as it would have been. The brown line shows the start of lockdowns, estimates of GDP falling quite dramatically. And then as we get to where all the colors start, the green was the idea of a V-shaped recovery. And you can see, if you just count the quarters, I know they're quite faint on the bottom axis, 1, 2, 3, 4. You can see that by the end of the fourth quarter, i.e. by the end of this year, on this V-shaped scenario, the global economy would be back to 95% of what it was in January, having come down from about 87, because of a strong recovery taking place from the third quarter onwards. Now, that's not spoken of much. We're now really talking about a longer dip at the bottom, perhaps a U shape, and that's reflected in the purple line. And it's that the IMF based its forecast on 2 weeks ago, of its baseline forecast, at which it calculated a loss to the global economy over the whole, if that baseline takes place, compared to the trend rate of $9 trillion. That is the equivalent. That's the size of the Japanese or the German economy. So, if you want to breathe or make a little whistle, that is an appropriate moment to do so. That would be the lost global output on their base scenario, which does not take into account the risk of lockdowns being ended, but then having to be reimposed because there's a renewed outbreak.
Tom, can I just stop there? Because I think you've said some really interesting and really important things. I mean, just for anyone who's gone into lockdown, I think it's quite easy to think that this might be for 6 weeks. This might be for maybe for 2 months, and then life is going to go back to normal. And what you've basically said is there's no way life is going to go back to normal, and that the shock to the economy has been profound, has been enormous. Is there any way to give some kind of comparison? I mean, can you look at a previous economic crisis that would give us any sort of idea of something in our own lives that we could relate to?
Unfortunately, not in our own lives. You really have to go back to the recession of the 1930s. Unfortunately, it has the chance of being that severe. I say chance, but as I said, the IMF base case is that purple line. But let's just talk about why the severity might be much more, and that is because the lockdowns will not be linear, and they will not be homogeneous, by which I mean on the linear side, we may have lockdowns that stop and start because of a return. And so the more you see of that, the more it inhibits spending in the future, and the more defensive people come over the long term. When I mean it's not going to be homogeneous, Austria, for instance, is talking about easing up restrictions on small companies. Well, that's great. If you're a small company, you think, okay, I'll get going. But my supply line might come from France, where the lockdown is on 20-year-olds and not older people. So perhaps your distribution from France is affected by that. We might have, as in the US, lockdowns ending state by state. So all over the place, we will see disruptions to supply lines that actually have the effect of curbing supply and demand across the whole line. And so that is how we get perhaps to that horrible brown line you see, whereby even by the end, I think that's the end of 2022, the global economy is still back not to where it was at the beginning of this year.
Right. So nevertheless, there have been some major interventions here, haven't there? I mean, you've got to give some praise to governments that have intervened on an unprecedented scale. Tom, can you just describe some of those interventions and what impact they've had?
Well, every time our Chancellor speaks, it seems like he's giving away more taxpayers' money, and that's an international phenomenon. The US, where I focus on because it is the biggest economy in the world, the debt to GDP was 5.8% last year. It's estimated to be going to be 15% in 12 months' time of GDP. Its total debt to GDP going up from 84% to 100% of GDP. These are eye-watering numbers over the next 12 months. But they will go a long way to mitigate the hardship felt by companies and individuals. And in a sense, you can ask, is it worth it? It will be worth it if it means we get that purple line rather than that brown line. And when it comes to central banks, wow, you thought they were experimenting at the end of during the financial crisis with quantitative easing, buying bonds from banks in huge quantities and giving them cash. That's nothing compared to what we're seeing now in terms of quantity. $200 billion worth of bonds every month by the Fed, as against the 80 billion a month during the financial crisis. And they're not just buying government bonds, they're buying corporate bonds, and they're buying high yield, dodgy stuff. And the ECB looks like it's going to follow suit. There may come a time where I could offer my second-hand suit to a central bank, and they'll say, yes, I'll give you money, I'll promise to sell that. Now, to spend that money. Now, of course, there are those who say this is way too much. Isn't it really akin to Weimar Republic, whereby the government deficit is essentially being financed because it issues bonds to pay for everything by the central banks that are buying these bonds? Well, central bankers say, no, because we're using the bond market. The UK has already broken its virginity on that, if I may say. So it does have a direct overdraft with the Bank, which it will start using. And the fear is, amongst those who have such fears, that this is the way to Weimar Republic inflation. I don't buy into that, but is that school of thought.
Now, listen, let's come on to that in a second. And I know there are other aspects you need to talk about in a second. We haven't spoken much about the European Central Bank. Also, there's oil. There's a couple of other issues to come back to. Let's come back to you in a second, Tom. But I'm going to switch and turn to Jeremy just to give you a break. Jeremy, this intervention is colossal, isn't it? I mean, the intervention we've seen from governments, so just saying now, but in political terms, that they had no other choice, didn't they?
Well, just follow from what Nick was saying, the way the political debate has changed. Remember, we were told by the present government and in the election, etc., there were no money trees. Well, suddenly they found forests of them. I mean, this is really quite astonishing. What's going on? Yeah, I mean, they probably didn't have much choice. Partly, I think, because of the mentality of electors, and electors think that governments can solve all problems. And therefore, they expect government to respond to solve these problems. And of course, the other thing is that no politician wants to be found responsible for unavoidable deaths. And so consequently, there's a sort of the mentality is to throw money at everything that moves. And once you start to do that, it's very difficult to stop. You've seen once the chancellor says, I'm prepared to give X million to this group, then the following day another group appears at the door and says, well, if you're giving money to those people, give money to us. So once you go down that route, it's very, very difficult to stop. And historical precedents here are very strong. I mean, if you look at, just take the UK as an example, if you look at the big increases in government expenditure, they've all come in times of national crisis, going back to the Napoleonic Wars, where, remember, income tax was introduced as a temporary measure. And especially the First World War, the Second World War. What's interesting is that after the crisis, the government expenditure and borrowing never go back to the pre-crisis levels. They always stay up to a certain level, and that's interesting. That's partly because of the things governments have committed themselves to, and the things that therefore people expect governments to do. So once you've gone down this route,
are you saying that they could have said no? Are you saying that they
they could have said no? I mean, anyone who follows the they could have said no, of course. But anyone who follows these debates is aware that this is all. There are lots of there are either ors, and we know full well the NHS, for example, will give a price to a life. It's £20,000 basically. That's it. And the government could have simply stuck with that. And they haven't. They've basically said, we'll throw everything at this we possibly can. And this is primarily for political reasons, I think. So they could have taken another line, and they could have said, we'll prioritise the economy over health, and we'll simply take take it on the chin that this year 20, 30,000 people more will die than previous years. They could have said that, but they've not said that, and they're not said that for the sake of the reason which I've already given, which is governments expect, the people expect, electors expect governments to solve all problems, and this is one of the problems governments expect to solve. So they could have done it.
Perhaps also might suggest that you've got control over the virus, and you can say, well, it's only going to kill 20 or 30,000.
Well, yeah. Well, I think one of the most, I can't bear to watch these sort of government broadcasts in the late afternoon, but there's a sort of, behind all of that is the notion that the government's in control. We notice, the number of times you're told we'll have X done by this date, or we'll have Y done by that date, and time after time after time, the government does not meet its commitments. But it seems to be that people are happy to the government to make these commitments. Remember how many tests we were going to have? We still got nowhere near. Boris Johnson at one point said, "What's 250,000 tests a day or something ludicrous?" And this is what governments do. And but the fact of the matter is, my personal view, when we come to look at this afterwards, is that we'll notice that the performance of both the government and the NHS has been pretty dire. But enormous amounts of money will have been spent on it.
Right. Okay, so let's go back to you, Tom. I mean, there are a couple of things that we were going to follow up on. There's the impact on oil, which is unprecedented. Let's deal with that to start with.
Yes, the negative oil prices seen at the Cushing terminal recently really did shock the oil sector, and it reveals that the US industry, and let's just remind ourselves, pumping out 13 million barrels a day last year, made it the world's largest oil producer, slightly ahead of Saudis. The Russians come up, I think, with about 9 or 10. And that has been revealed to have been built, like the Emperor's New Clothes, on illusion. J.R. Ewing would not like to be thought of as a recipient of OPEC price collusion, but that is exactly what's been happening. And now that OPEC price collusion fell apart once Russia had a spat with Saudi and the oil price sank, the price fell well below the $50 a barrel that the Americans need. It was already below, but now it fell into 20, and then it fell negative. And this, I think, is the high point for American energy output. We won't see it again. Banks and bond investors were willing to lend because they were looking for yield anywhere in a low yield world. But that illusion has been well and truly shattered, that US shale is a worthwhile sector. So I think that it's going to be the end of it, except for some of the most profitable areas. And that is a victory for Russia. Russia set out with the very specific intention of destroying US shale. The Saudis said, "Oh no, we can't do that. America's a friend of ours and everything." Instead, we'll try and we'll weaken Russia's position by overproducing ourselves. And you're scratching your head, yes, but won't that hurt US shale and your ally? Well, they turned a blind eye to that. Everyone was playing their own game, and the Americans have come out badly.
There's so much to talk about. Oil's one thing; it's a huge change. China's economy is supposedly going back into sort of productive mode, but one doesn't know who they're going to produce for. Although China's presented a case of being on top of the virus and being able to control its own society, it's in a tough position as well, isn't it?
It is. The Chinese economy has, for the last 20 years, relied on exports and investment spending, particularly from governments and municipalities to build real estate, to build infrastructure. What is lacking is household spending as a major contribution to GDP growth. In China, it's around 55%. In the US, it's 70%. And most Western economy, it's closer to the US. That means that once you've built all the infrastructure and all the real estate you need, and arguably China has, there isn't that motor of growth. available that we're seeing in the West from the household sector. Wages remain quite low relative to where they probably should be if it was a proper opening functioning economy. And so this is going to hamper the Chinese recovery. The second thing that hampers the recovery is that they're going to find it harder, I think, to progress onto their vision of being leaders in 5 key tech areas by 2025, largely because the gathering of the basic knowledge of many of those industries, whether renewables, 5G, has relied on cooperation with Western companies. And I think there's going to be tremendous intergovernmental pressure on companies to think twice about that, because there is a growing publicity and awareness amongst the West about China's bullying tactics in getting that technology. And China doesn't like it. It doesn't like it when the EU threatens to make public a report that it's written, comparing notes on how China bullies its way into getting European tech. And I think this is going to be a long-term problem for China. Plus, its financial system has been revealed to be beholden to the US for supplies of dollars. The Fed had to open a swap line with the People's Bank to make dollars readily available to stop dollar-based lending in China. Those companies that had borrowed in dollars where they had to be rolled over to stop them going bust.
Yeah, okay. Well, and that, I think that actually links into the next section, if you like, of our discussion, which is you've described what's going on now in terms of the economics, the impact, the dramatic impact around the world of the effect of lockdown and the virus. But then the follow-on question from that is, it's not just how quickly we come out of this, but what kind of impact is it going to have on our economies, how we relate to each other, and also how we relate to each other politically. This is an enormous, unprecedented shift in our lifetime. It has to, we've been a tremendously globalized economy. It must go the other way, surely now.
Absolutely. This is a godsend for those who want less globalization, and this has fans on the left and on the right. On the left, from workers, from unions; on the right, from nationalists. The Brexit debate, or the pro-Brexiteers, were themselves divided by, like, Professor Mitford at Cardiff, representing the let's have Brexit to have a more globalized world and get out of the protectionist EU, as against, I think, the majority of its supporters who would, no, let's have Brexit in order to escape globalization, and so we can have our waters back, feed ourselves with our own agriculture. And it's that second lobby that is going to win out in the Brexit debate, I'm quite sure, and I think in the globally. And they will encourage protectionism, not just of vital strategic things like vaccines, but it will be used as an excuse by producers to demand protections for all sorts of things. There'll be another call for protecting yogurt in France, the strategic industry, as there was 15 years ago. And this will harm consumers. But of course, the consumer doesn't really know it's happening, because prices go up slowly, because there's no longer the international competition, and it gets harmed a bit in the same way as, well, through osmosis. We don't really know what's going on. Sorry, that's the bad analogy, but it will harm the consumer.
Yeah, Jeremy, I presume you echo that. I mean, greater isolation, nationalism, protectionism.
Yeah, I think so. It's the globalization has had its critics for a long while. When this is, as Tom says, is a godsend. This is just what they wanted. And it seems to prove that they were right, and so on. But I think, as Tom also suggests, in the medium to long term, it'll be the consumer that will suffer. People take short-term interest, put short-term interest first, and I think we'll all pay the cost in the medium to long term for that.
Yeah, okay. There are a couple of other sort of specific sort of economic sides to this as well, Tom. I do want to come back to the question about inflation and deflation, the idea of, pumping all this money into the economy, and there's certainly people out there who think we would be heading to an inflationary environment, and that does conjure up the image of the 1930s, mass, very wide scale unemployment, people with huge amounts of debts, and then colossal inflation ripping everyone's savings away.
Yes, the deflationary pressures, however, cannot be underestimated, and just take, for example, interest rates. Negative interest rates reflect the fact that were in existence before this crisis, reflect the fact that there is very little demand for money, for investment from the private sector. And this has been a problem since the great financial crisis. The fact that, and so there has been relatively little investment, and this has curbed growth, it's curbed real wages. And when you don't have real wage growth, you have as a household a lower propensity to spend and a greater propensity to increase your savings. So people have been increasing their savings and not spending. The Asians are very good examples of this, but the Germans, the Dutch, the Finns run huge current, as well as the Asians, run huge current account surpluses, which essentially means they are saving more than they are spending. And this desire to save that existed before the crisis will be even larger afterwards as people repay debt. So despite all this money being created, what I'm saying is it will not go into the shops, into the real economy. It will continue an existing pattern of building up savings, and it will be used to pay off debt. And money is essentially killed when it's used to pay off debt.
The other thing you've spoken about a bit is cash. As there's greater central bank involvement, the use of cash is going to become less prevalent.
Yes. Now this is really interesting for monetary economists, because there are many of such who regard cash should be obsolete, a bit like the gold standard. Why would they want it obsolete? Because if everybody uses digital money, then central banks can apply negative interest rates by fear. You just tell banks charge negative interest rates, and that forces you to spend. And there's $1.5 trillion out there in cash, 1.2 trillion euros. And imagine if that was all held in digital accounts, and there were negative interest rates applied, people would spend and lift the economy. Now, there are other people who like that. China loves it because a digital economy means you can track exactly what everybody's spending on. So authoritarian governments like that. And you're also going to have a health and safety lobby that says, look, cash is dirty. It carries viruses, to the extent that the Fed keeps dollars that come into its vaults from Asia for 2 weeks, just in case they're carrying the spores of COVID-19. So it's dirty as well. The main argument against this is from a freedom. There is an expression, cash is liberty. I should be free, and I strongly buy into this, to buy whatever I want with cash without the government knowing. And I really fear that if we go down this road of digital economy, we are helping those who want a police state. And these are on the left, who believe the state should know what we do anyway all the time, and on the right, who will always use law and order as a reason. Jeremy,
do you want to come off the back of that? Because this.
Yeah, I do actually. I do, because I mean, I think what we've seen already. I mean, what you tend to get in times of crisis like this. Again, there's lots of historical evidence for this. Is you get massive increases in government expenditure. You also get massive increases in state power. And one of the ways in which it's manifested is the taking away of civil and political liberties. And it's always justified in terms of national emergency. And we've seen that already. Take just one example in this country. Municipal elections, local elections were cancelled without a murmur of dissent. It's quite remarkable. Suddenly, no elections. There won't be any elections until next year. Another example, I mean, I think, I have to be careful how I put this, but let's call it the abuse of police power in recent weeks in this country. Quite astonishing things have taken place in this country. People just being stopped, ordinary people being stopped for sitting on park benches and things like this. And that is one of the things that tends to happen. And I think what will be interesting in terms of the way we go in the future, it follows on from this, and there's not just an economic dimension to this, in terms of cash and so on, is I think to what extent will public attitudes have changed significantly during this crisis? So will we go back to something like pre-crisis normality? Or will there be a major sort of shift in public opinion? And that shift in public opinion could say, well, we're absolutely clear in our minds that we value security more than liberty.
Yeah.
And if we value security more than liberty, then we're prepared to pay the price for this. And Tom's just indicated one sort of way in which that might happen, which is the tracking of how you spend your money and so on. But there could be lots of other ways in which that occurs. And so I think it's in terms of a long-term possibility, I'm with Tom on this, not surprisingly. I mean, I do think this is very concerning. If people put security before liberty, then a lot will follow from that.
Yeah. So you're essentially saying I accept that the state has to have a greater role in my life to make my life more secure.
If that, I mean, you know, and for example, you see it. I mean, the Second World War, for example, produced a massive shift in public opinion in Britain, and that shaped the next few decades. And it might be in this case, and you know, we don't know. It might be the case that once the lockdown is lifted, etc., people just go back to the way they were before, and what have you. But it might be that there's something fundamental changes in their psychology, and the psychology might be just to increase their concerns about risk and so on and so forth. And in that context, be prepared to give government more power, and which is what government's like. And so we've already seen abuses of power taking place. I'm not saying necessarily go as far as things that Jonathan Sumption has been saying, but you know, the way in which the police have been using their powers in the last few weeks is really quite astonishing in this country. And that's in this country, which has a liberal tradition.
Can you go back a decade earlier? Could you go back to the 30s and just talk about, are there any parallels there? You've got, when you had mass unemployment,
yeah,
there's certainly more nationalism, people ready to vote for much more extreme political options.
Yes. I think from a political perspective, I mean, obviously the economic parallels are interesting, and Tom will know, one of the things that's interesting about the 20s and 30s was the fact that the range of options seemingly available to governments then were very, very limited. And there was no sense of sort of deficit finance and all of these sorts of things. So you know, governments actually didn't borrow in the 20s and 30s and so on. So the sort of the armory which governments are now prepared to use and which are constantly reinventing, as Tom has eloquently explained, was not available. I think the crucial question there, and that I think will be a crucial question here, will be the blame game. Who's at fault? When this is over, at the moment there's relative political consensus, you know, no one really wants to cause too much trouble. But once it's over, then there'll be a question of who's to blame. And that was the thing about the 20s and 30s, who was to blame? And it was out of that sort of discontent about, you know, conclusions which people reached about who was to blame, that you saw those sort of populist movements. And that'll be absolutely crucial in the next few years. Who will be held, not just nationally but internationally, to have been at fault, and from whoever wins that argument will be able to make major political capital out of it. And as you say, in the 20s and 30s, it led to mass populist movements of the sort of the left and the right, because people lost faith in the economic system, they lost faith in the political system. And when that happens, then you are in deep trouble. I actually don't think it'll come to that personally, but this question, who's to blame and who will pay? Who will pay for this? I rather agree with Tom. I don't think these fears about inflation will be realized, but the fears about unemployment could be realized. If you've got mass unemployment, people say, well, I wasn't to blame, someone else was to blame. And so on. So I think if people lose faith in the economic and political system as a consequence of this, then it will become more.
We've got some good questions coming in. So in about 5 minutes, we'll come to them. Just to give Isabel a tip, we've got Stuart Williams, who's got a good question, and Bruce Hooper. So if we could line them up, that'd be fantastic for in about 5 minutes time. But to come back to you, Tom, we're all going to be a lot poorer. Governments are going to be a lot poorer. Taxes are going to be higher. We just need to think, I mean, you mentioned that at the beginning, but I'd like you to sort of talk a bit more about the implications of that. And then also on the positive side of things, there's the tech side of things, Silicon Valley. I know you've got a few thoughts about that too. So those 2 points, and then we'll come on to people's questions.
Yes, who does one tax when all this is over to help repay the debt? Well, debt will look after itself if you can have nominal growth that's higher than interest rates. Nominal growth is real growth plus inflation, and so if you can get a bit of inflation and a bit of real growth, say 5% add the two together, and interest rates on what you're paying on your 10-year is 2%, then it slowly eats away at the real value, which is great. But in a world of very low inflation because of deflationary forces I suggested, and low growth because of insolvencies, unemployment, and people paying off debt, I don't think that's going to be how we pay it off. Instead, it's actually going to be through, and this is when we're out of this crisis, cutbacks in public spending and higher taxes, and particularly higher taxes. I don't know that the appetite in the Western world for another 10 years of austerity will see governments able to cut that much fat off, if there is any fat left on public spending. So who will pay those taxes? I don't think it'll be the young. The young are widely recognized over the last decade to have suffered from quantitative easing that raised asset prices, such as housing, to their disadvantage, raised pension plans and everything like that, and they were too young to get onto those. Instead, I think it will be the elderly, particularly those with assets. I can see pension funds being raided. And I can see perhaps an overdue shift towards actually balancing out so the elderly in the West do pay some more tax relative to the young. Over the 10 years, their voting power has ensured in many countries, particularly if you look at the UK, but also in the US, with rollouts of the public health care for the elderly over the last 10 years. I think that bias towards giving the elderly public spending and cutting it from the young will go in reverse. But you mentioned Silicon Valley and tech, Nick, and the two, and this feeds in quite nicely because of course tech has had a relatively good crisis. And a lot of these big Silicon Valley firms, whether it's Alphabet, who run Google, Facebook, Apple, have huge cash piles. So, and many of them also have a lousy PR because they went into this crisis suffering from complaints of monopoly, of fake news, remember Facebook and Cambridge Analytica, of lack of privacy safeguards, tax avoidance, evasion. I don't know what you call those structures in Bermuda, Ireland, Luxembourg, the Netherlands. So they went in with a bad PR, but with huge cash piles. They've been seen to have a good crisis. I think we will see finally real international efforts coming to fruit to tax these companies where they do business, and rather than on the basis of their registered holdings in the territories I've just mentioned. In the United States, I suspect I doubt Trump will win the next election. The betting I checked this morning on Sky suggests a small in favor of him against Joe Biden. Presidents haven't won a second term of office during a recession. Now, if Democrats win, and if they win both houses, for instance, and another if, a version of Margrethe Vestager, my Danish pronunciation isn't what it used to be, if I got her name right, but the EU's Minister for Competition, who's done tremendous work in trying to fine and limit the power of the Silicon Valley companies in Europe. If the US finds they can have a politician of her nature and her ability, with the backing of Congress and the president, I think we are going to see a breakup of some of the big Silicon Valley companies, similar to what we saw with the breakup of Standard Oil. There are some that come to mind, Facebook and Amazon in particular, will break up.
Before we move on, can I just add to that? Not on the tech point, but I think that this intergenerational point is really, really important. I mean, in terms of future political debate, because you know, if you look at this present situation, effectively the young are paying yet again. I mean, they're on the whole, the young are not dying from this, but they're paying the price for it again, frankly, to save people like me. And I think we're going to see whether the government can hold the lockdown. Will largely, I think, be driven by the behaviour of young people who I think are getting really, really fed up with this. You know, they don't feel threatened by it and so on. But I think, you know, given the context we've already had, where there's a generation which was very, very hard done by already. I think in the next few years this will become more and more of an issue. And, you know, there'll be the great expectation that this was done for old people, and old people should pay, not young people. Yeah.
Okay, I'm going to come to the questions now, and we'll take them in the order they've been asked. So Bruce Hooper, Bruce, go you far away. What's your question?
Right. Can you hear me? Yeah. Okay.
Yeah.
Given the recent dramatic rally in Wall Street, is the Fed worried that the market might be getting overheated, as it's announced after its two-day meeting that there will be no big new monetary action or guidance, only promising to keep interest rates close to zero? And does Tom think the markets might retest the March lows?
Have you got money resting on this question, Bruce?
Well,
I think we all have. We all have
all our pensions.
Indeed. Well, the fact the Fed didn't do anything yesterday was pretty well anticipated. We're expecting any meaningful policy change to be at the June the 11th meeting, the next one, largely because that gives more time for them to have assessed the impact on the economy, and there'll also be early signs of whether lockdowns the ending of lockdowns is a success. So they'll have more data to go on. And there is speculation that in their policy armory could be negative rates. Now, they're all denying this, but there is that speculation. In terms of markets, I'm very surprised at the valuations on the S&P 500, 19 times forward earnings, not so dissimilar to January. This is reflecting the V-shaped recovery, which I think is unlikely to happen. And I'm not qualified to give investment advice. I do suspect that there may be pullbacks, perhaps not lows to the levels seen in mid-March, but certainly Goldman Sachs, for instance, in their most recent research, are suggesting pullbacks because of optimism is way out of line with what appears to be reality.
Okay, Stuart Williams. Stuart, can you hear us there? I think you would. Can
you hear me?
Yeah.
Right. My question was, given that Russians, Saudi Arabians, or whatever, are disrupting the US oil market, i.e. their own production, why doesn't the US government just ban oil imports and become self-sufficient, use their own production?
Yes, indeed. A lot of the oil sector would like to see that, or tariffs put on, largely because they fear retribution. Once you start raising tariffs, you might then find that the person who was selling you oil puts tariffs on imports of Boeing 747s. There's a more technical factor as well, and that is that oil is not a homogeneous product, and I'm not very good on this, but there's heating oil, there's aviation kerosene, and for some wells, some countries' output is just too expensive to hydrate, or whatever the term is, kerosene out of the heavy oil they get, whereas other countries it is different. So in a way, they may well be producing, well, I know they are producing more of one oil than they need and less of another oil that they need.
Okay, Susan Scrimger's asked a question, and it's about Brexit. Jeremy, this is one for you. Where does Brexit go from here? We hear the government, the key members of the government who are sticking to their guns, where no change there, they say.
So is that the question? What about Brexit? Well, I believe what the government says. They intend everything to be done by the end of the year. This seems to me somewhat improbable, but this is what they say, and I see no reason why it shouldn't be the case. But you might have thought in these times, rather than add to the challenges facing British industry, you might just want to give them a pause on one front, if not on all fronts. But the government seem committed to getting it all done by the end of the year.
Okay.
I mean, it is remarkable. I mean, there was a sort of a cartoon in a national newspaper of right-wing persuasion, which basically had bring back Brexit. They're much rather talking about Brexit than COVID-19. And it's funny, isn't it? We get quite nostalgic about those Brexit debates nowadays. But yeah, I mean, the government seems intent on completing things by the end of the year. And obviously, and not surprisingly, if you were on the EU side, you would be seeking to use this as a reason for slowing everything down. But we'll see. The battle will continue. La lutte continue, as the French say.
Yeah. So Paul Jackson, and I think this question could be directed at both of you, actually. Paul, you can hear us?
Yes, thank you, Nicholas. Can you hear me?
Yeah.
You just have to wonder, if there was a Labour government in power, would the strategy for recovery be different to the Tories?
Tom, do you want to start that, and then we'll go to Jeremy? Do they have any choice?
Suddenly parts of me freeze when I think what Corbyn would have done if he was Prime Minister. I mean, one doesn't want to go there. But I think what we would have seen is they would, I'll take a punt that instead of giving loans to companies, they would be saying, we are going to be buying equity stakes in you. And we are doing this for the workers. We're doing this for all sorts of reasons. And they would use this as an opportunity, even as Jeremy said so well, every government likes more power. There would be no holding back if Corbyn was Prime Minister from using this as an opportunity to take power.
Yes, Jeremy has been proved pretty competent at the dispatch box, hasn't he? He's asked some quite sort of precise questions. But do you get any hint that he would handle this differently in terms of bringing the economy back online? Doesn't seem to be much difference there, does there?
No, and I think that's because, as I said earlier, there's a sort of national consensus. No one really wants to break ranks about what's happening at the moment, because, as I said, the last thing anyone would want would be to be found culpable and people dying needlessly. I think you've got a clue on to this. It's a very interesting question. I think you've got a clue to that fairly early on. For example, obviously people on the left mobilized and were immediately recommending. You remember when we couldn't get toilet roll in the supermarkets? It's a major national catastrophe that befell us. That there should be food rationing. There should be a Ministry of Food. That there should be the takeover of school kitchens and the provision of food for all and all those sorts of things. So there was a left-wing agenda, which I dare say was which Corbyn would have bought into, for a very, very different sort of strategy. And my personal view, I'm sort of disagreeing about this, I think one of the great successes of this has been actually in the retail industry. I mean, the companies like Sainsbury's and so on, and Tesco has responded magnificently to all of this. And there were temporary shortages due to panic buying, but once that was over, then things went back to normal in the most astonishing way. But there was a left-wing agenda, which was precisely of the kind that Tom was indicating, which would not have been to have offered loans, it would have been to buy stuff and never get it back. So I think that you probably could, that people might have suggested that. I think that would have been a disaster. I mean, my 92-year-old mother-in-law has just at long last received her food parcel, 6 weeks after being told she would get it. And then she said it was all horrible and all that sort of stuff. So this is a sort of thing which we might have had. We didn't have, and I think the private sector has performed very, very well in these circumstances. As for what will happen, well, I'm quite surprised by the position, the new sort of leadership we have in the Labour Party, which seems to return to something that we'd become familiar with for several decades, and it will probably be more constructive and so on. I mean, I was just struck by the fact that the birth of the Prime Minister's child was met with congratulations from the Labour Party, as opposed to a statement of complete indifference from Jeremy Corbyn. So things sort of have changed publicly, and I'm sure they'll change a little bit in the future.
Let's take another question. Rose Clark, I think Rose, you can hear us. I think we can hear you too, and I think it's a good question that follows up on Paul Jackson's question about the well, I mean, it follows up on the issues we were talking about earlier about the opportunities governments might have, the ability to intervene in the economy in the way they might not have done beforehand. Rose, go ahead and ask your question.
Yes, hello. I think my question essentially is about where does this leave the environment on sort of the political agenda? And is there any sort of appetite, both from an economic point of view, of the investment in the renewables and a sort of more environmentally aware sort of economy?
Tom.
I've heard that the political right in just about every country is looking on this as an opportunity to be pressing governments for growth, calm all this green talk nonsense. Let's get back to growth and then we can worry about environment. And I am concerned that global warming, environmental issues take a back seat in the search for growth. Instead, what I'd much rather like to see is real thought and energy going into continuing large use of digitalization for education, for work purposes. I don't want to be going out onto carbon monoxide-ridden streets in North London as I used to. I've enjoyed these pollution-free days. Central London has never looked clearer, the skies, and I want that to persist. And I don't want the old bores of, I hate to say this, but they do tend to be of big industry and the political right. I don't want to make a party political thing, who have always rather poo-pooed environmental concerns and would like to use this as an opportunity to shut up the green lobby.
Jeremy, what's your view on that?
No, well, I rather agree. I mean, I've certainly, living in central London, it's been a joy not to try to get across roads which are jam-packed with traffic and not be able to speak to your person close by because you can't hear them because of the planes above, etc. So again, this goes back to the earlier point I made about to what extent will people's attitudes change over the long term. Or will we just go back to say, well, fine, we'll put up with all the traffic jams and the pollution and all those sorts of things? And I rather hope we won't. I mean, I'm with Tom. I rather hope we won't. I rather like to think we'll say, well, actually, gosh, this has actually shown us what it could be like. And let's therefore put more effort into this rather than less effort.
I guess the governments have great, because they've pumped so much money into the economy and they'll be taking on debts that wouldn't have been there otherwise. They've got a greater say, and possibly they can use this influence to say that we will be pushing, the UK's target for 2050 zero carbon emissions. This is the opportunity to implement those policies, and you owe us money, therefore this is going to happen.
Yeah, well, they could do, but one of the things, it was just down to us as individuals. To what extent will our behaviour change? Again, it's always, I rather get fed up with it is what government will do, but what will we do as individuals? Let's imagine that. I mean, I've been working at home now for 5 weeks. It's not been too bad and so on. But why should I go back to that routine where every morning I get up and I get in the tube and I go to work and I work in an office in central London and all those sorts of things? It might well be that most of us will think, hang on, We don't need to do all this travelling. Well, that's a good government to say it's not doing it. I said, well, I actually don't need to do it. Why should I go up to Manchester for a meeting when I now know that I can have a perfectly good meeting through the internet? So it might be that if there's changes of behaviour for us as individuals, rather than keep constantly expecting government to do things, it's up to us as individuals. We might say, well, actually, yeah, I don't need to travel as much. I don't need to do this as much.
Yeah.
I mean, I don't know about everyone else, but I'm actually feeling quite rich at the moment, to be perfectly frank, because I'm not spending money on all the useless things I used to spend it on before.
Yeah.
You know, I mean, it's great. I'm not going out to restaurants and all of these sorts of things. Quite nice, really. So, you know, if we change as individuals, change our behaviour as individuals, we could make a major contribution to these things.
Jeremy, I miss our lunches.
Oh, well, I miss our lunches too. Yes, I'd always and our dinners.
Valeria, Stella, Papis, have you got a question there too?
Yeah, hello. I would like to hear from you about the future of the European community and your opinion about the Eurobonds. Do you think that a good, let's say, if the European community manages to use the emergency funds, do they want to do that? What's your idea about that?
Essentially, you're talking about, and this is the debate about whether the richer northern states should be helping the southern states who are having a tough time, and had an arguably tougher time with the virus. Tom, do you want to take that one first?
Yes, during the Eurozone debt crisis, the leader of the True Finns, a far-right party that has now changed its name to try and get rid of its past, but it said, we in Finland believe that somebody else is trying to milk our cow when this idea of debt mutualization came up. And there is a strong sense in Germany, the Netherlands, and Finland, and these are the three countries that have always been the most vociferous against debt mutualization, that the South will never stop positing debt mutualization as a solution for whichever crisis comes along. It wasn't so long ago that it was the solution to help deal with the refugee problem. And for the North, they think this is a step too far. This is not what the euro was about. For the Brussels bureaucrats who set up the euro, I think they rather assumed that it would take a crisis to create a fiscal union, and debt mutualization is all part of that, bringing a proper leg under the euro. Whereas for the South, they talk about this in terms of solidarity. And France, of course, plays an interesting position. And Jeremy, an expert on France, will be able to tell you more about this, because they actually I'll rephrase that, the French are on the side of the South, and people in Germany suspect, because the French also suspect, that one day they will want funds. I don't see these corona bonds, this debt mutualization happening. If it did happen, the northern countries would suffer huge reaction from their far right. Equally, if it doesn't happen, the far right and Eurosceptics in Italy and the South get political boost.
But the thing is, I know that each country as a member pays specific taxes for an emergency fund. I don't know exactly how it works economically, but do you know how it works? What it implies?
I'm not too sure those emergency funds would cover the huge amount of debts that have been.
That's right.
Jeremy, did you?
Well, no, I think actually, I mean, I agree. Probably it's not a good thing to have participants always agree with themselves, but I do rather agree with Tom here. I mean, I think this has really shown yet again the limitations of so-called European solidarity. And you see the way, I mean, the Italians were made an offer which they could refuse, but it was a terrible offer. And it was, I mean, humiliating to Italy. And I think the limitations to Germany's sense of general solidarity with the other members of the European Union has become yet again manifest. And I think the limitations, I mean, the speed at which, I mean, one thing is interesting, the speed at which European Union countries pull up national borders. I mean, without consultation. It was done in days. It was unilateral decisions to reimpose national borders without any broader consideration to its effects. And I think we've seen countless examples of national governments putting themselves first over the last few years. So I think the European Union has not really performed to its noble ideals.
Valeria, it's a huge subject, and I think we'll come back to it some other stage, but there's some very, very big arguments, some very interesting discussions to be had there. So we won't be able to sort of cover it effectively, but we will come back to that in a briefing later on. James Lernstein, I think you've got a question for us, and this will be our final question, Jim.
Yes, can you hear me?
Yep, we can.
My question relates to these developing countries that whose economies depend on oil exports. What are the consequences for international stability of the effect on these economies of low oil prices?
So, Tom, do you want to take that? In the back of my mind, I'm actually also thinking of Russia, which has got quite big reserves, but it's going to be hit very badly in the long term by low oil prices. But there must be other examples of countries that are going to be worse. Tom.
Indeed. Now, the Gulf goes into the crisis with a very large war chest. Russia's got a sovereign wealth fund that isn't quite so large. The real dangers are the more precarious countries: Venezuela, Angola, Nigeria. These are countries that were on the brink before, if you like, and or in weak positions, and so they get less publicity. But I suspect that those are actually amongst the weakest. The Gulf states need to diversify their economy. They know they do, but it's astonishing. Instead, you see the Saudi sovereign wealth fund buying prestigious trophy items such as Newcastle United football team. Don't know if that's prestigious, but why aren't they using that for home growth? They need to. The Gulf states need to diversify. They've got a very young population, as does Africa, the African countries, but they aren't. But it's the other lot, the weaker ones that I fear most of all.
Can I add to that? I think there's a broader point, not just about the countries producing oil, but I think there's a broader issue which relates to China and the debt traps which China has set up for lots of developing countries. So many of those countries are very, very, indebted to China, to the point that if the Chinese wish now, they can virtually tell them what to do. I think that's a big issue for the future.
We've got chance for one more, and that's Audrey Wolf. Audrey, you've got a lovely question.
I want to know if the President of the United States is looking so ridiculous that he can't really help either us or anyone else in the world.
It sounds more like a statement than a question, but nevertheless, we'll take it as a question. Jeremy?
Well, it's also one of the things, isn't it? The attraction of Mr. Trump to American electors has to be a mystery to most people. But he clearly has something. He clearly has something. A lot of people vote for him. A lot of people like him. And I think probably Joe Biden will win in November because he'll just be Mr. Normal and all that sort of stuff. But I wouldn't call that Trump. Yeah, it's all a bit of a mystery, isn't it, really? I mean, it's a national embarrassment, I'd have thought. But whether he can help us, I doubt.
Tom, in terms of leadership on the economy, what's your view? And he's a great favourite, very much in favour of markets, and very distressed when they go down.
Oh, I don't know. He's in favour of markets that he can have monopoly positions in. His trade talks with China were not about let's have free markets around the world, China, and help us do it. It was about you sell us X amount and we'll buy from you X amount. It was mercantilism. Now, my fear about Trump is that he has been shown to be a vote winner by his policies, and that somebody who is more attuned to spinning a good story, can do it better, takes over, or sees what you can do with pumped up nationalist rhetoric, and we have put it, a better version of Trump who is more effective. That would be my biggest fear, because he has shown that his vitriol and nationalism will win election.
Yes, yeah, US nationalism certainly alive and well. There, I think we have to leave it, everyone. It's been a fantastic and broad conversation. My thanks both to Professor Jeremy Jennings and to Tom Elliott for their help. Next week, Thursday, we've got a very interesting discussion coming up on South Africa. That's called Catch 22, Lockdown in South Africa, with John Mattison. He's the author of a biography on Cyril Ramaphosa. And then also Thulani Madondo. Thulani runs a charity in Kliptown on the outskirts of Johannesburg. And he's in a very good position really to say what impact lockdown is having on communities that don't have running water and who really don't have the ability to have sort of social distancing. And then a week later, we'll be speaking with an incredible young defector from North Korea about her flight from the North and to get a rare insight into life in the DPRK. Thank you again, everyone, to our speakers. Thank you both, Jeremy and Tom, and we'll see you all again online next week. Thank you very much and goodbye.